It's the season of earnings and Z has declared its numbers overnight. The management is now joining us. Mr. Rohit Gupta is with us. Thank you so much for taking out time for us. Can you just take us through the details on the bottom line? What is the reason for your loss? Your operational costs have increased in Q4. Take us through the operational cost and the provision that you made for COVID.
So overall, it has been a strong performance in a challenging environment. Regarding the cost, you are right. During the quarter, we have taken provisions. We have taken accelerated amortization and impairment in some of our balance sheet items. And this has primarily due to one, COVID, which is the global pandemic, as we know, and the changed business environment. So we have also taken view of the cash generation from some of our assets, and wherever required, we have taken reduction in the values. So these one-off items are starting with inventory, where we've taken an amortization of 2.6 billion. We have taken an additional provision of 3.4 billion in our ad and subscription debtors, and some of the other assets also where we feel that they have become doubtful due to the uncertainty caused by COVID-19. There is two more items actually. We have taken a loss of 3.8 billion on overseas investments, and the movement is basically to reflect the fair value of these investments on 31st March 2020. The fourth item is we have taken on our digital business. While the digital business is doing well, the revenue multiples have come down, and we have taken a provision of 1.1 billion on the goodwill that we have for that business. So overall, if you take off these one-off items, our margin bottom line for the year is at 27.5% during the year.
The company has first time delivered an operational loss. Take us through the outlook of operational performance. What led to the EBITDA loss? What kind of measures are you taking so that the cost can be controlled?
We have a strong performance. We exited the year with the leadership position at 18.3% viewership share. Subscription revenues during the quarter has been a growth of 41% on domestic subscription, and for the year at 33%. And like I said, the overall bottom line operationally underlying EBITDA is 27.5%. And digital platform again, along with content, its key technology partnerships are helping us to build tractions on the platform. So overall, it's a strong performance. We are a prudent company and we have a keen eye on the profitability. So that remains, and we have always, looked at cost cutting measures in terms of it. And therefore, if you really see, our margins have been upwards of 30% in the last few years. I think with the resumption of the ad revenues, the margins will come back very strongly.
Let's talk about the ad spend. There has been a cut in ad spend all across the board. Accounts are getting adverse due to macro situation and COVID impact. What's your outlook for ad revenues?
So on the advertising front, growth was impacted primarily by economic scenario, but the underlying demand for advertising remains high. And once the ongoing situation settles down, I expect the advertisers to resume spending. See, our overall, if you see the CAGR for our ad revenue, the growth is about 50. So I think this is a temporary situation. And, once the situation settles down, we will see ad revenues come back to the original levels.
Let's clear some air. Some reports were floating that Akash Ambani has joined the board of the company, and if all goes well, Reliance will take over Z Networks. Any truth to these statements?
So I personally have not, heard anything on this, and Really, I have no idea what you're talking about.
Just a final word with Mr. Goenka's resignation. Any message to shareholders for Z 4.0?
Well, Mr. Goenka has only resigned from the Z Media board, and I think that is a positive because he's going to be spending, all the time in Z Entertainment, where we are seeing growth and in the business, and really where he should be. So it's a positive only.
Thanks so much, sir, for taking out time for us. Always good to get perspective from you. On that note, completely out of time, leaving you with Nifty down 35 points. Banking, financial, pharma looking in weak today. Taking a break. Stay tuned.